big question. Is Wall Street still cooking the books? And we've got Francesco Guerrera here of the Wall Street Journal to discuss that with us. And this is all to do with how you mark the value of certain securities. Now, yes. Francesco is too wise to actually accuse anyone of cooking the books.
I would have thought so, yes.
But let's talk about how certain securities are marked and valued and then recorded, because this gets to the point of whether it's accurate or not and gets to the point of cooking the books.
So everybody on Wall Street worships at the altar of mark-to-market, right? It's supposed to be this great thing where you look at the value of the securities in the market and you mark them into the books as they are in the market.
Well, they used to.
Well, yes, but there's only one problem. During the crisis, there were no markets for a lot of these securities. Yeah. And we just had a case last week, I would call it a landmark case, in which 3 former Credit Suisse traders were accused of manipulating the value of these mortgage bonds for which there was no market. And so that raises all sorts of questions about how you actually deal with mark-to-market at a time when there is no market. And that's my view, and this is what I express in the column, is you really get to grip to the fact that markets go through bouts of illiquidity. So you have to be prepared for that. The regulators at the moment are not prepared for that. You have to be able to tell banks and auditors, well, if there's no market, you use these other factors to mark to market, because otherwise it's a mess.
So that was during the financial crisis,
yes.
And in the years ensuing. So now regulators have had time to think about it,
right.
have come to terms with this. So do we have new rules?
They've done nothing at all.
They've done nothing at all.
So let's repeat that. They have done nothing.
Nothing at all.
At all.
No new rules, no discussions. Okay.
Except that the Wall Street firms tell us that the rules are being considerably tightened, so these things could never happen again. Now,
ever.
We of course heard that before, so we should take it with a pinch of salt.
Of course, you didn't believe that a word of it out.
Well, no, but well, there is no evidence that would happen. Most importantly, it doesn't matter if I believe in it or not. The fact is, investors don't believe it, because once they've been burned too many times, and so Wall Street has to rebuild investor confidence, and in order to do that, he has to present books that are actually believable.
Yeah, books that are believable. So one thing that I'm going to get pointy-headed now. The big thing about accounting, right, is conservatism, right? We're going to take the most conservative view of the situation on our books. So what's wrong with marking everything that you don't know what its value is down to zip, and just saying, okay, you know what? It's not worth less than nothing.
Right.
So we'll just mark it there, and if we gain later, that's fine, and we'll record it at that point when we can realize it. What is wrong with that conservatism? It would be better for investors.
It would be so good for banks, because if you think about it, they have to take huge losses, paper losses, accounting losses
but it's
on those huge books. And the fact is, nobody likes to show a loss, right? And this we know. And so it's the issue would be, if everybody did it, then there would be less of a stigma attached to actually doing it, and it would actually act as a deterrent to actually putting on all those positions, right? You'll be erring on the side of being conservative, knowing that you have to mark them down to zero. I must say there is absolutely no support whatsoever on Wall Street for such a proposal.
Shocking news.
After the Credit Suisse case last week, which was a landmark case, as you said, what was the reaction in the street? I mean, what did other banks say?
When I was researching this column, it was quite frustrating, actually. People were telling me, well, why are you wasting time on stuff that happened 4 years ago?
Which is exactly why you should.
And they were saying, there's no story here, just this stuff happened,
Oh, there's a story when they say there's no story.
That's that. And also, I think the fact is that the banks labor under this assumption that people believe what they say, and unfortunately, that's no longer the case.
Right.
How do I know that? Because you look at the bank shares, and you look at where they trade, and people clearly don't trust their books.
Okay, so what do you want to happen? I mean, is there a simple formula here that whatever the last thing was, just halve it or something? Is there a simple formula?
For market, I think what the regulators should say to banks, and this is admittedly quite dangerous to say, if there is no market, instead of making up your own stuff, as it in fact happens, here are 6 parameters you should look at: models, formulas, other indexes, someone that is measurable and verifiable that you should use to mark or to mark your books.
And make it transparent.
And make it transparent so we'll know.